If you have been investing in dividends for a while now, then you probably know that they have an on and off factor. Of course, as investors, we must always be updated on what is the best in the market. Whether it may be a change in price or its percentage growth of the stock, we must never miss a single detail. ETFs are a sensible addition to your portfolio since they may offer stability, diversity, and a hands-off approach to investing. There are thousands of ETFs out there, but what is really the best for you? What's up everyone? In today's video, I will be sharing with you my dividend stock portfolio as an 18-year-old. Of course, we will be featuring all the amazing stock I think is worth the investment. We'll also talk about the power of the dividends that you must consider investing in. So, you might as well keep watching until the end to not miss these fantastic dividends and some important facts about them. But before we start the video, only a small percentage of people that watch our videos are subscribed. So, make sure to subscribe and hit the like button if you enjoy the video. Now without further ado, let's begin. Alright, the first dividend we'll be talking about is Schwab International Dividend Equity ETF, ticker SCHY. SCHY has a dividend yield of 3.56% and paid $0.82 per share in the past year. The last ex-dividend date was December 7, 2022. This ETF, which has a silver rating, has the identical approach as its enormously well-liked US sister fund, SCHD, when it applies to equities from other countries. With so much uncertainty surrounding US interest rates, this is an excellent moment to invest in overseas companies to protect us against domestic bias. Starting with a large selection of international equities, this ETF looks for those with the best dividend yields, highest profitability and free cash flow, lowest volatility, and a long history of consistent cash dividend payments. Value, quality, and low volatility are just a few of the market-beating criteria that are exposed throughout the selection process. With the symbol BND, Vanguard Total Bond Market ETF comes next to our list. This gold-rated ETF mimics the opportunity set accessible to active managers while taking advantage of its 3 basis point cost by holding a wide range of investment-grade taxable US bonds. VTI has a dividend yield of 1.64% and paid $3.18 per share in the past year. The dividend is paid every 3 months and the last ex-dividend date was December 22, 2022. Targeting investment-grade bonds with a substantial dose of credit-free treasuries is a solid risk management approach, since widening credit spreads are more likely in an impending recession. This fund tilts the portfolio away from riskier issuers by holding around 70% of its assets in AAA-rated bonds. It contains a modest interest rate risk that, if the Fed raises interest rates more than anticipated, might lead to the fund's demise. However, it also offers potential gains should the Fed decide against raising rates. BND presently yields above 4%, which is a significant increase over previous years. Because bonds started off with higher interest rates, they are now in a stronger position to hedge equities. For many years to come, this fund ought to deliver consistent earnings and performance in a volatile market environment. Alright, down to the final dividend here we have DFAC, the Dimensional US Core Equity 2 ETF. This gold-rated strategy has beaten its average category rival as a mutual fund since 2005, although it first became accessible as an ETF in 2021. The investment strategy of the fund favors firms with lower valuations, stronger profitability, and smaller market capitalizations while providing wide exposure to all sizes of US businesses. It has more than 2,700 equities and opts to remain involved in all businesses while focusing on elements that outperform the market, such as value, profitability, and small size. DFAC has a dividend yield of 1.47% and paid $0.36 per share in the past year. The dividend is paid every 3 months and the last ex-dividend date was December 20, 2022. So, by favoring value equities, the portfolio is shielded from businesses that may be unable to meet their long-term growth projections. However, value equities have their own dangers, which Dimensional cleverly mitigates by focusing on profitability. By easily outperforming the Russell 3000 by almost 4% points year to date, the fund should continue to gain a long-term advantage through factor exposure at a reasonable price. So that's about it everyone. I hope you learned some stocks that you might consider adding up in your portfolio. As always, thank you so much for watching, and please do share your thoughts about anything we've talked about in this video, as I will highly appreciate that. Make sure to subscribe so more of this content will keep going. While you're at it, give this video a big thumbs up. See you in the next one, guys.